Good evening. The Indian benchmark indices ended with marginal losses for the first time in 8 trading sessions, retreating from 14-month high. Markets seem to have taken a breather after participants preferred to book some profit at 5,650 levels. Frontline Indian indices had a largely range-bound session today and ended dead lower. Bold policy measures taken by the government regarding FDI in aviation and retail lifted the Nifty to close above the 5,600 mark on Monday. However, the RBI, even after living up to expectations and cutting CRR by 25 bips, did not seem to have lifted the markets further. The oil and gas, IT and pharma stocks were among the major laggards today. For a change, the broader indices were seen playing the catching up game. The BSE Midcap and the Small Cap indices ended higher by 0.9% and 0.7% respectively, outperforming the broader indices. The BSE Sensex closed at 18,496, down by 46 points, and the NSE Nifty was down by 10 points to close at 5,600. Any further rally in the markets would depend on additional measures to boost economy coming in the form of Department of Revenue, disinvestment and SEBI. Technically, the new pivot for the current up move would be 5,550 mark. The momentum would be on the upside unless the Nifty stays above the pivot point of 5,550. Kane, Wipro, TCS, Hindalco, Reliance Industries, Tata Motors, DLF, Cipla, NTPC and Tata Steel were among the major losers in the BSE Sensex and Nifty today, while PNB, BHAIL, SBI, Bank of Baroda, GAIL, Jindal Steel, JP Associate and Axis Bank were among the major gainers in the Sensex and Nifty. The India VIX on the NSE gained 0.3% to close at 17.83. In the span of 2 days, the Indian government announced much anticipated measures that were aimed at shrugging off its image of policy paralysis. First, after 15 months, the government hiked the prices of diesel by a little over Rs 5 per litre and reduced the subsidies on LPG. The move was aimed at cutting under recoveries of all marketing companies and reining in the government's twin deficit. Next, on Friday evening, the government approved disinvestment in 4 public sector undertakings and gave a green signal to the much anticipated moves of allowing foreign direct investment in aviation, multi-brand retail, power exchanges and broadcast. However, the dampener came in the form of a sharply higher reading of the wholesale price index for August, which stood at 7.55% versus 6.87% in July. As a result, the RBI, which had constantly maintained controlling inflation as its priority, left key interest rates unchanged at its monetary policy meeting on Monday. However, it reduced the cash reserve ratio, the amount of funds that the bank have to keep with the RBI, by 25 bips, thus injecting some liquidity into the system. In Asia today, Japan's Nikkei and China's Shanghai Composite Index ended down by 0.4% and 0.9% respectively on growing tensions between the two countries on the disputed islands. Hong Kong's Hang Seng also closed down by 0.3%, South Korea's Kospi was tared up by 0.1%, while Taiwan's TAIEX was down by 0.4%. Australia's ASX 200 and Singapore's Straits Times lost 0.2% and 0.4% respectively. Stocks in Europe were also trading lower due to fresh concerns regarding the region's debt crisis as Spain's bond yields climbed. London's FTSE was down by 0.6%, while France CAC and Germany's DAX were trading lower by 1% each. Thank you. Wish you have a great evening ahead.